Thank you. Thank you, Mr. Chairman.
Thank you very much, Senator. Senator Crapo.
Thank you, Mr. Chairman. Chairman Bair, I'm going to focus most of my questions on you, although I may, if I have time, be able to get to the others on the same issue. I'm going to focus on the resolution authority issue again. I know that you have proposed that the resolution authority be with the FDIC and that it be expanded to bank holding companies. There's a bit of a discussion as to how broadly it should be expanded and where this authority should resolve or should be placed. But when you look at the issue of the need for a resolution authority, we have, first of all, the fact that right now we only have resolution authority for banks. You've indicated that we should expand that to bank holding companies. We also have the issue, sort of a piece of the issue that Senator Bunning raised with regard to international holdings and what we deal with when we have American institutions that have acquired sometimes dozens, if not hundreds, of foreign subsidiaries, and how we deal with those kinds of jurisdictional issues. And I would just be curious as to your thoughts about where should the resolution authority be placed. I think I know the answer to that. But also, how broad do we need to be in terms of the establishment of such resolution authority?
Well, as you said, for bank holding companies, we would like to be the resolution authority simply because we already are for a bank, and you need a consistent, single, unified resolution regime. For other types of entities, if Congress wanted to give us that authority, we would take it. We are really the only place where this very specialized expertise resides. We've closed close to 3,000 institutions throughout our existence, small ones, large ones. And we have the staff and the ability to ramp up very quickly, as we've done over the past 18 months and have had in the past. So I think institutionally this is what we are equipped to do. So I think it would make some sense. The international component of this is very difficult, and we think that this will be a multi-year process to get some of these institutions in shape where their resolution could be much more streamlined. One of the things we suggest in my written testimony, it's also suggested in the administration's white paper, is to require these large institutions to have their own will, so to speak. So they need to have their own liquidation plan that they would need to update, say on a quarterly basis. And this should also be facilitated by having greater legal separateness among the very functional components. Part of the problem is these things are so intertwined. So deposits you may get overseas may be funding assets in the United States, and trying to tease all of that out in an orderly fashion is difficult. So we do think there's some infrastructure that needs to be put in place here. I also think, though, by designating some entity as the resolution authority, it will facilitate international discussions. We're doing that now, but we just have the bank piece of it. And I think if it's us or someone else, to have the defined authority that would be the entity that can negotiate agreements with other jurisdictions, to have systems and agreements in place where you do get the situation where an internationally active organization gets into trouble, we would have protocols in place to deal with this. Would
expansion of the authority at FDIC to include bank holding companies have allowed you to reach to Lehman Brothers and AIG?
Well, yes, theoretically it could have, because well, AIG was a thrift holding. They were thrift holding companies, actually. If assuming that you expanded to both banks or thrifts, or that charter is collapsed into the Fed, so everybody has to become a bank holding company, yes, it would.
And then where would we stop? Or I guess, is expansion to bank holding companies sufficient? Or I'm thinking we have insurance companies, hedge funds, private equity firms, mutual funds, pension funds. I mean, how broadly do we need to reach? What is the systemic system that we are talking about here?
We would not want the FDIC to decide that. I think that's something that the Systemic Risk Council really would be best equipped to do. And also, our process does not contemplate that we are the ones that decide to close the entity. That could be done a couple of different ways. One would be through the systemic risk process we have now. If it's a holding company, it could be done by the Fed as the primary regulator of the bank holding company. And that's the way the process works now. The primary regulator makes a decision to close the institution. That's frequently done in consultation with us, but then appoints us as a receiver. So I think.
Well, do you think it would be adequate to simply extend jurisdiction to bank holding companies?
I think if you wanted to do something quickly, and as I've said before, I am concerned that we're not out of the woods yet. And as the market starts to differentiate between weak and strong, and we exit these very government programs, we may be back in the soup. I hope that's not the case, but I'm not sure. I think as an interim measure, you could just fairly easily extend our authority to bank holding companies. You don't need to do that and get into systemic risk or anything else. I think we need to do that down the road. But yes, I think as a short-term measure, and I think we have drafted language at the request of some of you, which would be a very simpler amendment process. But that would be a very good tool to have now.
And I assume that that you would agree that establishing an expanded resolution authority would help us to get away from the concern that creating a systemic risk regulator for those so-called too large to fail firms would create an implicit government guarantee that they would be propped up as opposed to allowed to be wound down.
That's right. So we want it to be a bad thing, not a good thing to be systemic. That's exactly right. And I think you do that through a robust resolution regime that, as Mary said, makes it clear to the market this is the process that will be used, and shareholders and creditors will take losses.
Well, thank you. My time's up. I would love to have had the same question answered by our other two witnesses. Maybe we'll be able to get some of that. Can we have the other two witnesses comment on this? Thank you.
I really agree with what Sheila has said, and I'm very supportive of that. And I guess the only slight amendment I would have that would be for bank holding companies that have a broker-dealer subsidiary where customer accounts are protected under the SIPC law, that there be consultation in that process with the SEC, which I fully expect there would be.
Thank you.
Senator, just a couple of comments here. One, I would hope that the universe would actually not expand that greatly. That is, as we've commented before, Chapter 11 is the appropriate route for most entities, financial and non-financial. This ought to be a somewhat discrete mechanism which is used only in really unusual circumstances.
Thank you. In that context, if we do, I tend to agree with that as well, but if we do keep this narrowly focused, or as narrow as we're talking here, then I think we really need to face that question of the implicit government guarantee of the firms that are regulated by the systemic risk regulator or the system we establish.
And Senator, with respect to bank holding companies, you don't have to breach that question because there's no need to distinguish between a systemically important and non-systemically important. It's only when you get to the entities that are not currently supervised that you have that issue.
Right.